Target's Brian Cornell will be leaving the CEO position after leading the retail giant for the last 11 years. The company's current COO is going to be taking on that top job. That stock down by about 9.6% this morning. The company also announcing earnings this morning that were a little better than had been expected. But joining us right now to talk about all of it is former PVH chairman and CEO Manny Chirico. He's now LNK partner and BCI Brands chairman. And Manny, you've been in this business for a long time. What do you think about the stock reaction this morning to this news?
Well, I think the stock is reacting less to the earnings, which were, I'll use the word non-event. They delivered what they said, probably did a little bit better. But I think the focus is on the CEO succession plan. I think, when Target is successful, I think they lead with product design and innovation. And going with a very traditional CEO succession plan, Brian staying on as executive chair, bringing in the former CFO, COO to run the business, who's really not a merchant. I think the market was probably looking for something a little bit more bold that would take them more with a merchant prince kind of CEO coming in, or at least with more support under that. So I think that's the reaction. It's unfortunate because I think if you really dig into the numbers, there's some positives going on at Target. I think the inventory looks like it's back under some level of control, better position than it's been. But I think the challenge really is, although the results were slightly better than planned, they're more of a continuation of what we've been seeing. And with the second half, where I think you're going to see more margin pressure, I think the market is really questioning whether they can deliver anywhere near the midpoint, the top end of their guidance. And I think they're pricing the company at the low end or below what their guidance is right now.
Okay, so the company did come out today and reaffirm its guidance for the back half, but you're saying investors don't have faith in that?
I think so. I mean, if you look, the stock is down $10. It seems to be under pressure. If you look at the relative multiple where they've historically traded the last few years, I think it's more guidance to, I think what you're going to see consensus is more around the $7 number than you're going to see around the $9 number. They gave a pretty wide range of $7 to $9. And anytime you give that broader range, it kind of signals to the market that you're really not sure what's going to happen in the next 6 months, which is unfair, because I don't know that anybody knows what's going to happen in the next 6 months, given the tariff confusion that's going to be going on.
Hey, Manny, we're looking at a stock chart going back to the middle of 2020, so I guess about 5 years here. That stock took off during the pandemic, was really one of the outperformers. First of all, they were one of the ones that were allowed to stay open, but then Brian Cornell also kind of innovated to make sure that they could have delivery come out to your car, delivery to your house first day. What's happened since then?
Well, listen, I think their value, a couple of things. Their value message is significantly less than a number of their main competitors. And by their main competitors, I think we're really talking about, obviously, Walmart and Amazon. And I think that's up. And I think when you look at the product offering, it's gotten very basic. Target has been historically a private label house. I'd say 75 to 80% of the product offering is private label, and that requires a great deal of merchandising magic. And that magic over the last 3 or 4 years has just not been there. So it's been a much more bland offering. When they hit their problems, that they were missing sales fairly significantly against where they were guiding the street when they came off of that high point, the stores were loaded with inventory. Store presentations really suffered. And it was really a major problem. The company indicated itself that they were really having problems moving through goods. And I think they lost a bit of their way. And I think merchandising is going to be key going forward. And I think the market is questioning whether the internal candidate, with Brian staying on as executive chair, is that a bold enough move going forward?
Let's talk about some of their brands they do have, because you're right, private label has been the big deal for them, and when they hit it right, stock does respond and reflect, as do consumers. They've got Heart and Hand, which is Magnolia for their, the Magnolia brand for their home goods. They've got Disney that they've used in some of these, along with Marvel for some of the kids' home brands. They've got Cat and Jack, which are their kids' brands, which are pretty good. Where are they missing? And I will point out Ulta, that Ulta partnership is about to fall apart next year.
I'm talking about merchant princes, and the last thing in the world I am is a merchant prince. But when you go in there, if you think back 5 years plus at Target, there was always the exciting new product that came in. It was something that really was a market change. They had, in the past, there was tremendous amount of collaboration with designers where they would have capsule collections for 4 to 6 months, which would hit the store, and they were like magic. They would sell out immediately. They need some more of that magic. I'm not saying any one of those things is the solution, but what I am saying is the excitement that was created by that, and there was a customer base at Target, which makes it appealing as a retail customer, from a wholesaler or from a brand, is it tends to be a younger consumer than what you see at a Walmart. So there was a real benefit to have your brands presented there. I think if I was being critical, I would say is they continue to look at value and margin, and kind of, really the product mix going forward got very basic, and the level of excitement in the store really was pulled back. They need to refine.
So you're saying they can't out Walmart by trying to compete head-on with them. They have to differentiate.
That's a great way to say it, Becky. I think that's right. What they really did better than a Walmart or whatever is they created merchandising magic. They created excitement in the store. People wanted to go in to see what the new product was, what they were doing that was different. You remember the old way? Nobody called the company Target. It was Target. There was that real feel when Brian first came into the company that they brought it back. Through the pandemic, and the pandemic, everything got very basic with what was going on for that year period, and everybody was chasing goods from a supply chain point of view. I think they got caught up into it. They got over inventoried, and moving through goods became a challenge, and the store just lost a lot of its excitement.